Good evening and welcome to the latest market wrap. Sorry, my name is Daniel Ang, and today, of course, is April the 19th. And today we'll be talking a little bit about what happens in the past week. We have seen quite a bit of volatility going into the week itself. But again, we have to see what happens in the coming week because I think whatever happened this past week, we could possibly see a total reversal in as early as tomorrow because of certain things that happened over the weekend. Now, before we go into the content itself, let me remind you that this presentation is for informational purposes only and does not constitute investment or financial advice. It is not intended as an offer or solicitation for the purchase or sales of any financial instruments or service. This presentation may contain forward-looking statements including opinions, forecasts, expectations, or conclusions based on current views. These opinions are subject to known and unknown risks and uncertainties, which could cause actual results or events to differ materially. This presentation is general in nature and does not constitute a professional advisory relationship. You are advised to consult with a qualified financial advisor before making any financial decision. Now, with that out of the way, let me recap what the market has been doing for the past week. On Monday, April the 13th, we have President Trump declared a complete blockage of the Straits of Hormuz. Now, this is essentially double locking up the straits. And we all knew that Iran has basically blocked the Straits of Hormuz for quite some time now. So, President Trump on Monday declared that he is going to block the entrance of into the Straits of Hormuz came as a surprise. And as a result, we can see crude oil prices jumping back above $100 per barrel. On Tuesday, President Trump claims that Iran wants to make a deal. Okay, again, this is very much in line with his behavior since the start of the war. We knew that he will, make a very bombastic announcement followed by some kind of a easing of tension. So this is very true to his way of confusing the public. Okay, here we see that on Tuesday, Trump's claimed that Iran wants to make a deal, and that at the same time, U.S. Went ahead to block this entrance of the Straits of Hormuz. By midway on Wednesday, April the 15th, we can see that the Saudi Arabia basically is asking Trump to scale back his military campaign and to start negotiation, or basically to return to negotiation. We also received news that Saudi Arabia has basically asked the American to leave their military base, and they have actually asked Pakistan's military to take over those bases. So not sure whether those there's any substance to those rumors, but I think it is quite possible because they have given Pakistan quite a fair bit of money, and Pakistan has gone ahead to acquire new aircraft from China, and basically is becoming the new protector of the Saudis by taking over the American rules. Okay, again, there is this rumor floating around in the marketplace. Again, I could not verify whether those are true or not. And on Thursday, April the 16th, we have President Trump again suggesting that talks ending talks aimed to end the war has will resume this week, and this is of course being celebrated by the market because the entire week, other than Monday, we can see that Trump is basically playing the nice guys, right? He's basically sending out very positive messaging, which calms tension in the marketplace. On Friday, President Trump's say that Iran's foreign minister also confirmed that the Straits of Hormuz will be fully open to commercial vessel. Okay, and but then again, President Trump added that the blockage of the Strait of Hormuz, as far as the U.S. is concerned, remains fully in force. So there is that again, uh, complimentary remarks made by the Iranian side say that they are opening up the streets. Now, within hours of that, the streets was reclosed again because President Trump added that he will start to bomb Iran again if he doesn't get a peace deal or some kind of a deal by April 22nd. So this is something that again is escalating the tension on a Saturday when the market is closed. So on Sunday, which is today, Iran's reacted to that renewed bombing threat by the United States by reclosing the Straits of Hormuz and actually fired upon two Indian oil tankers, and this is again ratcheting out the tension within the Middle East. So do expect some kind of negative reaction in Asian markets tomorrow morning, because again the rising tensions again occur over the weekend, which has become a trend. Weekend has become very dangerous for anybody who holds position overnight. What could be cooling down of tension may easily escalate over the weekend when one side decides to wrap up the rhetorics. Okay, so this is the situation in which you're facing, and this is also the reason why I think whatever happens in U.S. equity markets or global equity markets, we saw Wall Street actually went up to new highs, except the Dow Jones. All major index went into fresh all-time high, and this could easily reverse itself by tomorrow morning in Asia. Okay, there will be something that we want to watch. Now, as far as market is concerned, again, we want to run through the various assets as to see what has been their performance so far this year. Okay, for spot gold, we can see gold actually hit a all-time high just under $5,400 per ounce in the later part of January before slamming down to $4,100 towards the end of March, and then now it has rebounded back to now try the $4,900 per ounce. So this has been the market reaction in precious metals, but I think it's looking tentative. There's every reason to suspect that the gains in precious metals led by gold may actually unravel in the coming weeks, leading all the way to perhaps a fresh yearly low by the time June is here. Okay, so far in silver, we can see silver has also rebounded and taken back the lead on a percentage basis. We can see that gold has gained almost 12% so far this year, whereas silver after this past week bounce is back to up 13%. So we can see that the movements in both precious metals, as far as especially silver, is not as robust, leading to suspicion that there is not enough momentum to carry on the most recent bounce here. Silver actually traded to a high of $83 on Friday. Again, that will be very much dependent on whether it can sustain this rally. As far as Wall Street concerned, we can see that the S&P 500 is now at a fresh all-time high. Remember, the previous all-time high was 7,002, and now the fresh all-time high is 7,147. And there's a few reasons why stock market has been so strong since the end of March. So we can see that within 2 weeks, whatever losses Wall Street has suffered or has been erased in just 2 weeks. Okay, so this is a very, very strong rally, likely to see some kind of momentum behind it. But again, I have my suspicion here. So Nasdaq has also been doing very, very well, but it is still very much in negative territory. But I think over time, it should also be able to erase all the losses we can see so far. This week we can see that it's trading at 26,720 thereabout. So it's also a very, very strong rebound from 23,000. As far as the dollar is concerned, the dollar has pulled back somewhat from the high of mid-March. 100.53 was the high traded so far this year, and last we saw on Friday was dollar back to 97. As in the coming week itself, the dollar may actually rebound. Okay, and in crude oil, we can see signs that the Americans and the Israelis the Iranians are actually open to ceasefire, has actually caused the crude oil prices to unravel from $117.60 per barrel down to 80, just below $81. So whether this is going to be seeing further losses ahead, I think there's a good chance it may actually bounce at least on Monday. As far as the U.S. Treasury concerned, we can see that U.S. Treasury has been struggling, although the market has been up since the start of the war. But we can see that the 2 years Treasury yield is climbing again because there is an issue with liquidity in the marketplace. So much so that the Federal Reserve is now currently pumping. This past week, the Federal Reserve has actually pumped massive amount of liquidity into the marketplace, in basically just to hold the market together. there's a lot of reason why the Federal Reserve needs to pump liquidity into the marketplace. Later on, we will talk about it. Then, of course, Bitcoin has also benefited very much. Now it's trading just under 79,000. Again, that has got to do with the pumping of liquidity into the market itself, which typically will benefit from increased liquidity across the board. So digital assets have actually done well this past week, although in the last 48 hours, we can see there's a bit of a profit taking, pulling back the Bitcoin down to 75,000. Okay, let's go into the content itself. Now, the only key data that came out this past week has been the core producer price index. Now, this is a wholesale inflation, which will always be felt at the wholesale level. Here, the core means it takes away the component of food and energy. So we can see that PPI latest is at 3.8%. Now, 3.8 is only a touch lower than the previous month of February, in which it was 3.9%. So as far as the PPI is concerned, we don't see signs of a increased inflation. This has also been a period in which they have taken into consideration the war that's happening in the Middle East. So this came as a bit of a surprise because the market was prepared for a number of 4.2%. It came in lower than market expectation. So it is very much in line with the revision done for February from 3.9 to 3.8%. So overall, we can see that the market has basically ignored the situation in the Middle East. Not sure why the higher energy prices has not been felt at the producer level just yet. Okay, but I'm sure in the weeks to come or in the months to come, eventually higher energy prices is going to trickle down into these data sets. So just be prepared to see higher inflationary pressure in both the PPI and the CPI levels. Yeah, we go into the index itself. Let's cover the four major equity index, starting with the Dow Jones. But let me give you a background as to what's really happening. Like I said earlier on, the Fed has been injecting liquidity. In fact, since the end of quantitative tightening, that ended on December the 1st, 2025. And then immediately after that, you can see the Fed injecting $40 billion into the system. And then again, in February this year, just before the war broke out in the Middle East, the Federal Reserve added another almost $20 billion. So year to date, before this week, you can see that the Federal Reserve has added something close to $60 billion into the system. Then on Thursday, the Federal Reserve injected another 40.5 billion, principally through the buying of the 2-year Treasury bills, because we can see that there is a little bit of liquidity issue, and also the fact that foreigners are basically selling US Treasury, that has increased the pressure to pump liquidity into the marketplace. So all in all, we have seen the Federal Reserve since December last year has pumped almost more than $100 billion into the system, and this is something that we want to continue to monitor. There's a few reasons why it's the case, and of course, April has been the tax season. A lot of corporations will have to cater for taxes, so they will need liquidity in the marketplace. So that is seasonal. But the other one that we want to really be focused on is actually what's happening in the private credit sector. The situation is getting from bad to worse, so much so that the Federal Reserve is actually setting up new units to actually monitor and asking all the banks to actually report their exposure to private credit. And this is getting to be very hairy because remember in 2023, we have the SVB, we have the Silicon Valley Bank that collapsed just practically overnight. So right here, we can see that it is almost the same thing here. Okay, the private credit has been around, and they have been what we call the private banking, the shadow banking sector of the United States. And these are not very transparent, and they are the values are not marked to market. Okay, and we can see that JP Morgan Chase has actually downgraded a lot of all these funds that are basically providing credit to the AI. Okay, last year, the whole of 2026, the whole of 2025, we have seen massive investment into the AI sectors, principally into hyperscalers and data centers. And to date, we have yet to see any of this company, reporting profits. And with this year, we can see the energy prices has become a new risk to the AI story. So it's inevitable that early investors in the private credit, okay, now wants the money back because they are getting very, very nervous. And the fact is that all these private credits are very long-term investments. They are not liquid, and so request for redemption has not been met fully, and this is creating a negative feedback loop, resulting in more people wanting to redeem their money out from these funds. So that could be the reason why the Federal Reserve has been pumping excessive amount of liquidity into the marketplace in a bid to stabilize the situation. Okay. Now, this past week itself, we can see events that have caused the stock market to actually rally to fresh all-time high. On Monday, we have President Trump declaring a complete blockage of the Straits of Hormuz. And although the market did not react to the downside, in fact, it has actually gone higher. On Tuesday, President Trump claimed that Iran is ready to deal, and that has created a positive sentiment in the marketplace. Basically causing the price to actually rally. Midweek itself, we have Saudi Crown Prince MBS asking President Trump to actually scale back military campaign against Iran and to return back to negotiation. Again, that is seen to be a net positive. However, at the same time, well, the Saudi Crown Prince is asking President Trump to scale back military campaign. They also have basically kicked out U.S. military forces from their bases in Saudi Arabia and replacing them with Pakistani troops. So again, this is something that again needs to be confirmed. On Thursday, we have President Trump suggesting that talks leading to some kind of extension of the ceasefire is again placing bids under the stock market itself. So we can see the entire week itself, except for the Monday rhetoric, we can see that the marketplace is getting ready, or basically hoping that something positive is going to come soon. Okay, and on Friday, Trump being Trump, say that as far as the Straits of Hormuz is concerned, Iran has actually agreed to allow commercial vessels to pass through, even though the United States will maintain the blockage at the mouth of the strait. Then on Saturday, when the market is not open, this is where I think the real problem has returned, because Trump again decided to up the ante by saying that he will bomb Iran again if there is no agreement by April 22nd, which is going to be midweek, this coming week, okay? Then, of course, on Sunday, Iran actually reacted to that threat by reclosing the Straits of Hormuz and then, for good measures, fired at 2 Indian oil tankers. So again, we are back to very heightened tension again into this weekend. So tomorrow is going to be very, very telling whether the market is going to see this as bad news or they're going to far back their hope of a quick return to peace. Okay. So again, this is something that we want to be monitoring tomorrow. Okay. So the rally in the stock market also coincide with the earning seasons for Q2. We have seen banks are reporting very good results. We can see that JP Morgan Chase actually report very, very strong Q1 earnings on the back of record earnings in their trading activity. So we can see that the market has been, or rather JP Morgan Chase has made more money in an increase of 13% in net income through trading activities, not so much in doing their legacy banking loan kind of business. They are making more money from the trading desk. Then again, we can see that Reuters put up a report saying that the rally in the S&P 500 are very concentrated on only a few stocks. Okay, the index rose almost 4.5% on the whole of last week to new highs, and we can see that a lot of these companies that actually led the rally in the S&P 500 are led by tech stocks. We have Broadcom surging 18%, and then the other 5 major contributors of the rally, we have Nvidia, Microsoft, Alphabet, Meta, and Amazon, basically taking the market up almost 8%. So this is very, very concentrated in a sense that it is not widespread. Okay. On the other hand, we can see that some airlines may not survive this round. Okay, we have seen that certain airlines are already at the borderline whereby they're going to go into chapter 17 or something like that. Okay, basically getting ready for bankruptcy. Then here the main driver is optimism. Okay, uh, how long and how far the 10-day ceasefire will last. I think the market is riding on the hope that it will last. So this is very, very dangerous because we can see that the situation in the middle is not a done deal. It can always unravel very, very badly, leading to an increase in tension in the Middle East. Okay. So the Dow Jones itself has actually rallied quite a fair bit. Now, the Dow Jones has not been able to go to fresh all-time high. We can see the all-time high is at 50,512. The highest traded this past week is just under 50,000 at 49,717. There is every risk it will unwind. The way I look at it, until it breaks into new high, there is always the possibility that we will see another selling decline way below the 45,000 that we have seen so far this year. Okay, so going forward, I am still a little bit bearish on the overall market, especially the big cap. Okay, so here my opinion is that there is still the risk that we may see an unraveling, ideally in a three-wave pattern, leading the Dow Jones down to 40,000 thereabout. Okay. Tanvi is asking Dow Jones didn't go up relative to others index. Why did smart money park their money into them? I have I have my doubt as to I think this rally that we see because it is so concentrated on only some of the big names. It is very likely that the money is not in stocks. Okay, it's not broad-based enough. In order for markets to actually go up, if we have been tracking the futures market, I gave a presentation on the 16th. In which I was specifically talking about U.S. equity markets, the volume open interest did not match what we are seeing in terms of price. Yes, price wise we have seen Dow Jones, no, S&P 500, Nasdaq, and the Russell 2000 all going to new high, but the volume did not match what we are seeing in price. So I suspect that over time we could see a real unraveling of the rally that we see in Wall Street. As far as the S&P and Nasdaq and the Russell is concerned, there is the possibility of one more push higher. Okay, and then after a brief pullback, we can see that the real market may actually unfold sometime in late May or early June. Okay, so going forward, I'm still going to maintain a somewhat bearish outlook, although technically I have to wait for confirmation. So far, all markets have turned positive. Okay, here we can see that even in the Dow Jones, despite the fact that it has not broken into fresh all-time high, you can see that the bias is favoring the upside. Okay, so I need further confirmation that to support my bearish outlook for U.S. equity markets. So far, okay, sorry, this is Nash. I want to show you the gosh. Okay, this is the National 100. Okay, National 100, you can see there is possibility what we are seeing here could be part of a third wave to 26,719. And for that to happen, I need for market to come back down to test the 25,000 before going up again. Somewhere in between 27,000 to 28,000, I would expect a blow top then to complete this entire sequence from 22,841. So ideally, somewhere between 27,000 to 28,500, a top can be finally be in place before we see a more meaningful and sustainable decline. Okay, the overall market bias is still to the upside now. Remember, I'm showing you the 4 hours. So these are 4 hours outlook, and they are decidedly bullish right now. So going forward, if you are going to be trading short term, there is a possibility if the market do experience a pullback somewhere into 24,700 to 25,300, the bracket of prices I think offers uh, uh, a sensible area to engage the market on the long side for one more push higher beyond 26,700, ideally into 27,200 to 28,400. So that will be my call. So the Russell 2000 here is also very similar to what we are seeing in the Nasdaq 100. Here we can see that the rally up to 793 is a very aggressive move, leading to idea in the short term we could be seeing the development of most aggressive phase here, followed by a pullback ideally into 2,600 to 2,660 levels, followed by another rally to take out the whatever high that is in place currently at 2,793. Ideally, the top can be found at just under 3,000 points. Okay, if that's the case, I'll be looking out for weaknesses in the index itself. But for now, we can see near term, the market remains very positive, unless the market goes below 2,300 points, which is highly unlikely at this moment in time, unless there is an escalation in violence in the Middle East. Here, we're talking about dollar here. The dollar here, of course, remains and still uh, pursuing that bullish view, although technically speaking, the market right now is in negative territory. Uh, the market high so far in dollar index is at 100.5. We see the pullback this past week to 97.4. There is every possibility that pullback from 100.5 may have completed at 97.4. And if the market continue to extend higher, uh, especially above 101.81, it could be gunning for 104.70 at some point in time. Okay, so until that happens, until 100 or 101.81 is taken out, the market is still technically bearish, at least in the near term. Okay, here in the euro itself, I have made known that I'm basically long the dollar index. I'm also correspondingly short the euro versus the dollar. The high traded this past week on Friday was 1.1950 thereabout. And if we see an unraveling in the euro versus the dollar below 1.14, it could go all the way to 1.07. Long term, I am basically bearish on the euro versus the dollar. So that has always been my case, because when I look into what's happening in the EU, especially in Germany, we can see the high energy prices is beginning to add to further stress in the EU economy. This week we have further news that the European only have 6 more weeks of jet fuel left. So if they run out of jet fuel, that will be major news. Okay, and that will means that not only will a major sector in the economy tank, I think it's going to disrupt air travel going forward. So if that is the case, further escalation in jet fuel prices is going to be bad news, especially for Europe and for Japan. Okay. And as far as commodity is concerned, let's take a look at the oil situation. Now, oil has rallied all the way to a high of $119 and just under 50 cents to as low as $87.97 this week itself. And that has been largely what's happening in the marketplace, where all the noises that has been made by President Trump has led to believe that something positive is going to happen in the Middle East, and it actually released the tension in the oil market. But we can see that the low traded is at $87.97 per barrel, and that has the potential to actually create a bottom, because when I do that move from $117.66. This move here is a three-wave point, which is actually hit equality at 79.1, and then just by a bit, and then the market actually gone up. So I suspect that this area where there are confluence between this three-wave larger degree pullback and the internal three-wave, which is a minor degree, they all coincide at about the same price. The ideal bracket was actually between $72 to $74 or $75. So the market actually found a bottom at 70, just under $79. It's actually quite encouraging. So going forward, there's that possibility market may actually continue to go higher, and there is that risk that the market may go beyond the all-time high. For that to happen, of course, we need to see a major escalation in violence. And if either the Israelis starts to bomb, or the Americans started to do something serious, or the Iranians starting to respond, then of course all bets are off, and we will be back to square one. Okay. I suspect that this violence may not end. In fact, there's a real issue, there's a real possibility this war that's happening in the Middle East may not be resolved until Donald Trump ends his second term. Okay, and that is at least 2 years down the road. Okay, so that is a possibility, in my opinion. So as far as gold is concerned, we can see gold has actually benefited somewhat from a low of $4,100 per ounce. It has gone up to test the $4,900. So it is creeping towards the ideal bracket. In here I have a target here. When I join this line together, there is a resistance line. Okay, and of course, whenever you do the projection for A, B, C here, we probably will see an internal move towards just under $5,000 to $5,255. That bracket remains still viable. They could be we could see the re-emergence of selling interest. So we can see so far that the bounce has not been very, uh, how should I say, the bounce has not been very supportive of momentum. In terms of momentum wise, I don't see that the market is very, very strongly supported. Okay. So I suspect at some point the seller may actually be incentivized to come back. Okay. And if that is the case, that is that risk, the market will go down and revisit the most recent low at $4,100 per ounce to go down as low as $3,660 per ounce. When that will happen, if it ever happens, remains to be seen. But there is that possibility here. Here we are seeing possibly a double zigzag. We have one zigzag here, which is a three-way pullback, okay, ABC, and this could be another set of ABC, okay. So if that's the case, if this is another ABC move, it will be a double zigzag, and if that's the case, then it support the scenario of another decline below $4,000. Okay, but by and large, I want to be long gold because I think longer term, this could be the last buying opportunity for those who are seriously considering stacking up precious metal going forward. Okay, as far as silver is concerned, we are seeing quite similar pattern here. The all-time high is $121.65. We can see that the pullback down to $61 is followed by a bounce back this week to $83. So can it sustain? I do not know, but the market hit a pocket of prices within this very minor bounce here into this bracket of $80.26 and $83.47. So the high traded this so far this week is within this bracket here. Of course, there's every possibility that it may surge higher in the coming days. Until that happens, I want to see confirmation. If the market starts to unravel, okay, especially below $61, it will probably lead to a decay down to $45.50. Okay, so this is precious metals. Let's take a look at Bitcoin. Now, Bitcoin has actually done relatively well. We can see a bounce back to $78,000. This is the highest level since February of this year. After the market hit 60,000, we can see this is the highest point so far after the market hit the low at 60,000. So again, very similar to what we are seeing in precious metal, the rally does not have very strong momentum. And the fact that the Federal Reserve is pumping liquidity in the market typically will benefit digital assets. So the bounce here that we see in Bitcoin could be a result of the increase in liquidity in the marketplace, leading to an appreciation in the digital asset space. Okay. Now the top side here will be the barrier to cross will be 81,000 to 85,000. In the market cannot sustain above 85,000. There's every risk it will come back down again and retest the 60,000. Okay. So my target here is that if this is going to be the case, there's an ABC move equality that will probably see Bitcoin going out to $52,200. So again, going forward, is this a good price to go in and buy Bitcoin? I do not think so. I think the market still has the possibility of failing to cross 85,000. And if that's the case, look for a sign that there is of any kind of sell-off. And if the market couldn't sustain beyond 85,000 and come down very aggressively, that will more or less validate my outlook here. For Ethereum, it's also very similar. The bounce from $1,741 looks very tentative, and the market top side could be anywhere between $2,600 to $2,700. So it's just not that far away. Market closes. Last I checked was $2,300. Okay, so in the coming days, if the market intends to resume its rally, the level to bid will be $2,750. Failing which, there is the risk market will come back down below 1,741 to anywhere just above $1,000 per coin. Now, the Ripple is also very similar. We see the market go down to $1.11, and the current price is about $1.42. Very tentative, not much of a strength relative to Bitcoin and Ethereum. Top side, in my opinion, is just under $2. Okay, if this one fails to hold, it could go all the way down to 60 cents. Okay, that to me would be a bargain price, and I may be interested to take a look if that is going to be the case. Okay, so going into the new week is going to be relatively I won't say light, okay, but because retail sales is a major high impact news that will come in on Tuesday. The consensus is that retail sales is going to see a doubling from 0.6% in February to 1.3%. If this is the case, that it shows that the US economy is relatively resilient. Okay, there is no estimates for the control group. Likewise, there is no estimates for the S&P Global Manufacturing and Services PMI numbers. Okay, so not sure what will be the end result, but relatively, this is what we can expect on the economic front. Now, if you have questions that you have not posed, then please send me your questions by WhatsApp if you want to. Then again, I want to also remind you of people out there impersonating me, taking my image and my name and go out there to canvas for investments. 2 days ago, I received somebody who alerted me via LinkedIn that he is a victim of such a scam. And basically, he's reaching out to me to befriend me. And I told him it's definitely not me, and he has already made a police report. So this is attempts by various individuals and organizations to go out there to scam locals, okay, unsuspecting followers of mine. So this the guy. I do not want to reveal his name, but these are the messaging that he had with this guy on Telegram. Okay, basically, the ironic thing is that this guy is actually a head of a security on sustainable technology. So even an expert like this also fall for such a scam. Okay, so it makes ordinary people like you and me even more vulnerable. Okay, because he's supposed to be the expert in this. Okay, and he also got scammed. So that is telling us how prevailing this scam is in the marketplace here. Just be very, very aware that there are unscrupulous individuals out there trying to scam people who uh, who are lured into very high returns investments. Okay, if it's too good to be true, it probably is. Just remember that. Okay. So my next event will be on May the 9th in Kuala Lumpur. I'll be doing a seminar for RHB, and that will be in Kuala Lumpur. That will be about 2 hours, and that will be on May the 9th. On May 16th, I'll be back in Singapore to give another presentation for Tiger Brokers. This one is going to be a 4 hours event. I will not be the only speaker. In fact, was only given 30 minutes to speak. Okay, so again, if you want to join any of my events, you're more than happy. I'll be more than happy to give you the link to register for those events. At the present itself, I have not received any of those links, but I'm sure they will be forthcoming in the coming weeks. So if you are keen, let me know if you are keen, especially for those who happen to be in Kuala Lumpur on May the 9th, and for those who are in Singapore on May the 16th. All right, guys, this will be what I intend to share with you today. Do you have any other question you want to ask me? Any at all? Just be aware that I am currently in Singapore. If you want to meet up, let me know. Okay. Tanvi is asking another question here: that where liquidity is pumped into the market by U.S. Fed, who are actually the recipient of this liquidity? Mostly they are the banks. Okay, because the banks are very exposed to private credit. Okay, and the banks companies needs to raise money to pay for taxes. This is time of the year in which taxes will have to be paid. So if they have not already provisioned for those taxes, they will have to go out to borrow. And usually they will have to borrow from the banks. So this is the Federal Reserve pumping liquidity into the market itself, and anybody who needs to tap on those liquidity can always go into the repo market or into the overnight loan market. Okay, so yes, it will goes into the banking system. Anybody who needs liquidity to borrow will have to tap through the banks. Okay, in the States. I hope that answer your question, Tanvi. Anybody else who has anything else to add or want to ask? All right. Remember, I do expect some kind of negative reaction uh, tomorrow when the market reopens in Asia. Okay, whether that will be enough to cause the market to unravel remains to be seen, because the market sentiments right now is very, very strong in the United States. Okay, so whether common sense will prevail, because all this rally that we have seen build up over 2 weeks has been on hope that the 10 days ceasefire will actually lead to a more permanent ceasefire. Iran has actually saying that they are not in agreement with what President Trump has been tweeting. Okay, is there buying opportunity? Not yet, at least not in equity markets. Although technically speaking, equity markets, based on the level that I just mentioned, I do expect a near-term pullback and then another rally beyond uh, this past week high. Okay, and that could be seen to be the last push higher before. I think if this thing can last all the way to May, okay, that will be the maximum I would think the stock market will rally. Okay, sometime in late May, early June, I think is where I think the danger is, because in terms of timing, I think those days also coincide with what I'm looking at precious metal markets. I suspect that precious metal markets will find a permanent reversal, a very strong move uh, in the coming period between May and June. In fact, going into April 22nd, it is going to be highlighted to be a very important day, because President Trump has already mentioned if he doesn't get a deal by April 22nd, okay, he is going to resume bombing. Now, Iran is not going to take that lying down. Okay, so if that leads to a all out, retaliation, then everything that we have seen so far will basically unravel. Okay, so I'm putting my I have yet I'm long no, I just got out of silver this past week. So currently I have no position in precious metals, because technically I think there is the scope for another pullback first before the market stabilizes. I am not in equity index futures. I have no position right now, but I'm long on crude oil. Okay, I am very long crude oil going into this week itself. As the market pulls back, I was adding to my long position. Okay, so currently I have three long position in crude oil, and my idea is that over time I do expect higher crude oil prices. So other than crude oil, I'm also long dollar. I'm also short euro versus the dollar. I have very few other positions that are open. I'm being very selective now. So maybe that will be something to continue doing. All right. Anything else you want to add before we end tonight's session? No? All right. If there's no other questions, do know that I am toying with the idea of doing live trading. Okay, this will be something that I have been thinking very hard for quite some time. My partner is telling me there is a market for that, so I'm not sure whether you guys will be keen for live trading. Of course, that will be again based on what the market wants. Okay, if the response is good, maybe I will launch it. Okay, so we will probably take a poll, and then we will see if there's any demand for such a thing for live trading. All right, guys. Thank you very much. If there's no further question, wish you all the best and in the coming week. Bye bye. Take care.